Okay, guys, we'll go ahead and get started. So please welcome Brian Coombs. Am I saying that right? Perfect.
Yes,
okay.
Coombs.
So he's down at KWCO, and he's going to take us through foreclosure and short sales today. I know it's, we were just chatting about it. It's kind of a crazy market out there, no matter what you're doing. But he'll help us give a little guidance to this, little niche part of the market too, right?
Yes.
So thank you for being on here, Brian. I'm not great at introducing people here, but there you go. Take it away.
All right. Well, I have been in, just a little FYI about me. I've been in real estate since 2006. So I went through the last craziness that the housing market had in 2008. It really hit us in Oklahoma in like late 2009, early 2010 range. So I've kind of seen it and been through it. At one point, I worked at Mary Berry's office. So I have sold and worked with buyers on literally hundreds of foreclosures. I've also have quite a bit of experience with short sales. So, and most of my experience, most of my knowledge has been learning by doing. I think that's the best way to do these because the rules, the guidelines that banks use for their foreclosures and stuff like that, they change all the time. So you got to be willing to and be able to kind of roll with the punches and change as it goes. So just that's just a little bit about me in a brief overview of short sales and foreclosures. If you've been in real estate for longer than a year or so, you'll know what a short sale is. A short sale is where you're asking the seller's bank to take less than what they are actually owed as the payoff. So say, just for round numbers, their payoff is $150,000. House is only worth $120,000 in its current condition. So that's kind of what we're dealing with on the short sale. We market it and advertise it as a short sale, and then once we get an offer, we have to jump through all these hoops on the seller's bank side in order to get the contract approved. Obviously, with all that said, there's nothing short about a short sale contract. The only thing short is the money that they're getting. I tell people typically to expect 4 to 6 months for a short sale process. And with this COVID stuff and a lot of the reps that I'm seeing for banks working at home, and sometimes they don't have the greatest connectivity or the greatest response time, that's even going longer. So if you have a buyer that's interested in short sales, that's great. They're as is, no repairs are going to be made, and the value that they've got is supposed to be set on an appraisal. And so if you make an offer, don't be surprised if the bank comes back and counters your offer 4 months, 5 months down the road, because it happens. Then it could be, once you get an approval of your contract, then you go into the normal. That's when you can do your inspections. That's when you can really start the title work and everything like that. They typically give you 30 to 45 days to close once they've approved the contract. But again, that may be 6 months down the road. So if you have a buyer that is wanting to get a deal and they're interested in short sales, if they don't have the patience or the time available, like if they're wanting to move into this house and their lease is up in 3 months or whatever, don't even bother. I mean, it's just not going to happen because the process is just longer than that. It takes too long for that. The reason why it takes so long for short sales is because banks typically don't even start their process till they've received an offer. So those of us that are listing short sales, what I try to do is I try to list them at what I think is an actual legitimate value for the house in its as-is condition. Some people go with the whole, we're gonna list this thing at $50,000 just to get offers and let the bid be driving up the listing price and kind of see what the bank says at that point. And some of them just say, you know, hey, we're going to list it at $50,000. We're going to get a $50,000 offer, and then we're going to send it to the bank, and then the bank's going to respond. And then we'll have a real marketable value. Personally, I think that's a waste of time. It's a waste of my time. It's a waste of the buyer's time. It's a waste of the buyer's realtor time. Because just to give you an example, I had one listed in Lindsay for $50,000. And that was the legitimate, actual good value. And 4 months into the process, the bank comes back and counters at $75,000. That's with me giving it what I think is a legitimate value. Someone could have listed that at $30,000. And there's just a difference in a buyer, even an investor, that thinks they're going to get it for $30,000 and the bank counters at $75,000. Well, you just wasted 3 months. You really just did. Because 9 times out of 10, that buyer is going to back out. Because they more than doubled the price in that scenario, $30,000 to $75,000. The other thing that you need to know, and you need to make sure the listing realtor knows, because sometimes listing realtors will take on a short sale and not really know what they're doing, is the bank can counter. In my example, they countered back at $75,000. I contested that. You can contest the value. I sent them different comps, and I sent them the damage that I had pictures of and everything like that. And we got that value lowered by another $10,000. And that was a more reasonable counter. We were able to get it hashed out and get everything going. But again, this has been 4 months in the process, and we're supposed to close by the end of this month, thank God. So again, short sales are not for the faint of heart. It's not for someone that is in a hurry to move in and everything like that. And you kind of really need to know what you're doing. So you can at least set the realistic expectations for your buyers. And if you have a listing, someone calls you and says, hey, I haven't made my house payment in 6 months. They're threatening to foreclose. The bank said something about short sale. What is that? So basically you're negotiating with the bank on the value, and the seller has to jump through several hoops, just FYI. They've got to provide a legitimate reason for doing a short sale, a legitimate reason why they can't make the payments, why they fell behind and everything like that. They've also got to provide bank statements and pay stubs if they're working and everything, and a letter that says, this is what happened. It's called a hardship letter. This is what happens. Typical reasons for hardship is going to be divorce, someone in the family got sick, got laid off, got fired, stuff like that. Those are legitimate, typical reasons for a short sale. I had one guy try to tell me that he wanted to start a short sale, and it's only because he was tired of that house. And he didn't think he could sell it for enough to break even. And he couldn't because he'd only owned it for 2 years. I had to tell him, look, that's not a legitimate reason. You're still making enough money to make the mortgage payments. Nothing in your life changed. You got to have a legitimate reason for a short sale. So that's the basic general gist and overall overview of short sales. The foreclosures are actually easier on the buyer side, because by the time a house has gone through the foreclosure process, the banks have gone through there and winterized it. They've gone through and done at least one appraisal and probably multiple broker price opinions to get a value. Again, they're as is. They're not going to make any repairs. They're not going to negotiate your contract after you do inspections and you say, oh, the AC doesn't work. Well, on their end, the AC didn't work the whole time, and they priced it accordingly. The only time I've seen a bank or HUD be willing to negotiate is if the condition changed after you got it under contract. I had one where a storm came through and knocked down the tree, and it hit and it landed on the roof. Well, that changed the value. That changed the condition of the home. What they did was they went in, HUD put it on hold, and they went in and they took out that tree and they repaired the damage. So they didn't negotiate monetarily. They didn't change the price or anything like that. But they put us on hold, and we had to extend the closing by a couple of weeks for them to get that cleared up. The other thing that could happen is vandalized. Property could get vandalized. Somebody could go in and steal copper, steal the AC unit, stuff like that. I had one client that had a HUD house under contract. Someone stole the air conditioner like 3 days after we got under contract, and HUD offered them a $500 credit at closing. And the buyer said no, because it would cost them $6,000 or $7,000 because the whole system was going to have to be replaced. And we busted the deal. They got their earnest money back and moved on down the road, and they got it under contract with someone else. So again, the only time they negotiate is if the condition of the property changes, something changes. You doing inspections and finding out that it's got termites, or finding out that there's termite damage, even though they've treated for termites, or the air conditioner doesn't actually work, or stuff like that. They don't care about that. That's not going to affect the condition, because they've priced it forward. So there's that. There's several different banks that do foreclosures, like Bank of America, Bank of Oklahoma, Wells Fargo. But the biggest two that we see in our market is Fannie Mae and HUD. Both of those are loans that were guaranteed by either Fannie Mae, which was government backed, or HUD, which is an FHA loan, again, which is government backed. We'll see some Wells Fargo, we'll see some Bank of Oklahoma, stuff like that. And that's loans that they've actually kept. It also means that it's either a conventional loan or a bank loan, because all FHA loans are going to end up at HUD, and they're all going to be a HUD listing if they make it that far. Before a house gets on the market and before the foreclosure is actually finalized, it goes through a sheriff's sale, where they go to the courthouse or some designated area, and they have an auction. During this COVID stuff, most counties here in Oklahoma put those on hold, and no auctions were done. So they're slowly rolling those back out. We're going to see more auctions and things like that. Obviously with social distance requirements and everything like that. But your buyer can go to an auction and buy the property directly from the bank. But 9 times out of 10, it does get bought back by the bank at the sheriff's sale. They do set the value at, or set the bidding price at, I believe they start at 75%, 70 to 75% of what their appraised value is, no matter what is owed on the property. I've seen a foreclosure go into sheriff's sale where they owed $20,000, but then they started the bid at $75,000. Just FYI, if that happens, the previous owner is supposed to get the balance. So if they sell it for $75,000, then the extra after the loan is paid off and all the fees that they've tacked on with the attorney fees and foreclosure fees and everything like that, once that's gone through the process, then they'll give them the balance. So if that ever happens, just so you know, I have had a few people ask me about that. It doesn't happen very often, because most of the time when they stop making their mortgage payment, they also stop taking care of the property. And you'll see some really messed up carpets, some interesting decor ideas. I've seen fence paneling on walls. I've seen some crazy stuff. You know, they all almost always steal the stove and or the dishwasher because that's theirs, dang it. Even though they didn't make their mortgage payment for a year or longer by the time they've gone through the process of foreclosing. The foreclosure process does take at least a year. Seller can completely stop making the mortgage payment, ignore any attempts from the bank to contact them, ignore any letters that they get, any phone calls and everything like that. And that will take at least like 9 months. Just that's the general process. So if you're talking to someone and they're like, well, I haven't made my mortgage payment in 5 months. Well, we still got time to sell, and there may still be some equity. But you need to let them know that in the meantime, the banks are tacking on late fees, unpaid interest, this fee, that fee. You know, they're paying the taxes for them. They're paying the insurance for them and everything like that. Because if you're not making your mortgage payment, the insurance isn't getting paid through your mortgage payment. So they're gonna tack on insurance, and it's not gonna be cheap insurance. Certainly not gonna be the cheapest one in town that they can find. So, you know, I've seen the payoff go from $75,000 on one statement, and then they didn't make their payment for 6 months, and then the balance was $125,000 because they've tacked on all these fees and everything like that. So any equity gets eaten up really quick when you stop making your mortgage payment. So there's that. Then again, once it goes through that process and it's actually bank owned and a foreclosure, like I said, the value that they've got it listed at is going to be based on at least one appraisal and probably 2 or 3, if not more, broker price opinions. Broker price opinion is basically an appraisal that a realtor does. They don't measure the property, and they just go off the tax record as far as how big it is and stuff like that. So, and we only use the MLS. So it's a little bit less involved than a full-fledged appraisal that a normal appraiser would do. But it's going to give them a legitimate value. Because I do BPOs all the time, and some of them are pre-foreclosures, and I know that they've listed them eventually based on some of the values that I've given. So with that said, if it is listed at $100,000, the likelihood that they're going to accept an offer for $75,000, $70,000, even $90,000, it's not very likely. Especially in today's market when there's so much competition, so many buyers out there putting in offers for everything. You're going to have to assume that if your buyer is making an offer on a foreclosure, that there's multiple offers, and they need to make their best offer right up front. Don't make an offer and then assume that the listing realtor or the bank is going to say, hey, we have multiple offers, everyone needs to give us the highest and best by this date and this time. They don't have to do that. Multiple offers are not required, and some banks don't do it. They just say, we're going to look at these offers and we're going to accept the highest one. So all they care about is the one that nets them the most. They don't care if it's a conventional loan or cash. They don't care if it's a home equity loan or, you know, whatever. The only thing that they may look at is if you're trying to make your buyer's trying to make an offer with a VA loan or an FHA loan, and they know dang good and well that the house won't pass the appraisal process. Again, they're not going to make any repairs. So you have to educate your buyers on, well, if you're doing a VA loan, you want to use your VA, and there's this mobile home in the rural area of Tuttle that is listed for $60,000 that has, we could tell from the pictures, it's missing the stove, the carpet's either missing or all kinds of messed up, there's holes in the walls. It's not going to go VA. It's just not. It's not going to pass the process. So That's the only thing that they're going to look at as far as the owning bank is is this a legitimate offer that has a legitimate chance of getting through the process without any hiccups. Once you get it under contract, it's the normal closing time. It is going to be 30 to 45 days to close. That's why I'm saying that foreclosures are easier on the buyer and easier on you, the buyer's realtor, to deal with, because it reverts to the normal process. The only caveat is, again, it's as is. Can't stress that to your buyers enough. It's as is. They're not going to make any repairs. There's just, they've priced it appropriately for the condition. So there's the general overall. After you get through the Fannie Mae's, Bank of Oklahoma's, Bank of America's, then there's HUD. That's the other biggest one that we have. And that was an FHA loan that was guaranteed, government-backed, guaranteed. HUD makes it a little easier on us because they're now accepting electronic signatures for you, the buyer, your broker, and the buyer and the title company. Everyone can sign electronically. You go to HUD's website, HUDhomestore.com, fill out the offer, submit it, and then you'll know by the next business day or by the deadline. Sometimes if you look at there'll be a running countdown for a deadline, and it'll show you all offers have to be in by 11:59. It's always 11:59 on this date. And then what they do is they look at the offers the next business day, which is usually Monday morning, and they take the house off the HUD's website while they're reviewing those. And I tell people, usually if it gets taken off, and usually if it's not back on HUD's website by 10 or 11 o'clock our time, then that means that they've accepted an offer, and in general, you need to tell your buyer to move on to something else. So let's see if we can find something else, because that one's typically under contract at that point. And you'll get, if you win the bid, you'll get notified. You'll get, like last time I won one, I got 4 emails from the listing realtor and from the asset manager, and then from a contract specialist at HUD, and then I got a duplicate from someone, I can't remember who. But I got like literally 4 emails. So there's no way you can say, oh, I didn't know we won. You got notification. The only thing that they don't do is call you. And sometimes the listing realtor will call you the next day and say, hey, where's this earnest money? Because once you win the bid for HUD, you've got 24 hours to turn in the earnest money to the listing realtor, to their office, wherever their office is. That could be Mary Berry's office, that could be Rodney Burgundy's office, that could be someone in Shawnee, it could be wherever. So you need to be on the ball and be able to get the earnest money to them within that 24 hours, or have a legitimate reason. Because sometimes HUD will work with you if something comes up. I've had it where buyers went out of town, which I don't know why they went out of town, knowing that they were making an offer on a HUD house, but they went out of town and they couldn't meet with me until 2 days later. Well, I emailed the contract specialist, explained the situation, and they gave us an extension. So HUD is willing to work with you within reason. If your buyer doesn't sign the contract that comes to them through DocuSign, then they will eventually bust the deal and it'll go back on the market. So everyone needs to be on the ball. Best advice I can give you on the buyer's realtor side is, once you win it, make sure you call the title company that you said you're going to close at and let them know. Make sure you call your broker, because if your broker's like our broker, she gets 300 emails a day and it can get lost in the mix. And then make sure you call your buyers and let them know to look for a email from DocuSign. and it's going to be all the document. Now, sometimes that will take a day or two for them to get everything worked out and translated into the offer or their contract and everything like that. But it will come. And then they give you a deadline. Typically, if it's cash, it's 30 days. If it's a loan of any type, it'll be 45 days to close. HUD will give you one extension for free, and it's got to be a legitimate reason. If they're getting financing and they weren't able to get their financing together or whatever, it happens, some hiccup come up and they had to, fix something on the lender side or on the buyer side in order to get everything hashed out. HUD will give you an extension. Usually that first extension is free and it's for 14 days. Any extensions after that are not guaranteed and they're not free. HUD will tell you how much it costs, but typically it's $25 to $45 a day with a minimum of 14 days for the extension. So, $25 a day, 14 days, your buyer has to pay $300-ish in order to get the house extended, get the contract extended, and there's no refund. That's just a fee to HUD that they've got to pay for the privilege of extending that contract. So you just got to know that that's coming down the pipeline and that the buyer needs to be on the ball. The lender needs to be on the ball. If you have a lender that has never done a HUD before, they need to really know what they're doing. And most lenders that we use, that I use at least, are local lenders, and that loan officer in particular may not be an expert on foreclosures or HUDs, but there's someone in their office that is. And typically they just transfer that over to a loan officer that really knows what they're doing. Again, you got to know what you're doing with these, because you could screw it up. You could cost your buyer the deal if they don't understand the process. Loan officer doesn't understand the process and everything like that. It could end up either costing your client money and or the deal. And nothing will get you sued faster than you not doing your job, the contract busts, and then it ends up selling for less than what they had it under contract for. I promise you, you're just going to get in all kinds of trouble and get all kinds of sued and everything like that. So make sure that you know the process, you understand what's happening and what's going on, and that your buyer understands what's happening and what's going on, because they all have different guidelines, different rules. For example, HUD will give you 15 days on an owner occupant to do inspections. Well, Fannie Mae will give you 7. No, I'm sorry. Fannie Mae will give you 10 days to do any inspections that you want to do. Bank of Oklahoma may give you 7. So you gotta know what the guidelines are and what their restrictions are, and it's going to be spelled out in the contract. And the addendums that they give you, make sure that you read it, make sure that your buyer reads it and knows what they're signing. And again, can't stress this enough, while your offer is contingent on inspections, they're not going to make any repairs. I know I've said that several times, but you'd be surprised how many times I say that to a buyer, and then the buyer's like, well, are they going to fix this broken window or this AC that's not working? And I have to just laugh and say, no, they're not going to fix it. What part of that as is are you not understanding? So it just got to make sure that you understand and make sure that your buyers understand. As is means as is. They're not going to make any repairs. So that's an overall general overview. That's a brief overview of foreclosures and short sales from most likely your perspective. I'm assuming that you guys are going to be working with buyers, not assuming that you're going to be listing any of these foreclosures. If you're going to list these foreclosures, it's a whole different world, it's a whole different class and everything like that. And there's a whole different registration process and hoops to jump through and everything like that. So Again, I'm just assuming that you're going to be working with the buyer. In general, does anybody have any questions or comments or whatever? Because I know this is kind of a mastermind, and I just want to open it up and let everyone ask any questions that they may have about this process.
Just a quick reminder to everybody that you are all muted, so make sure if you have questions, unmute yourself first.
So how do you become a short sale specialist?
Honestly, learn by doing. I consider myself a short sale specialist because I have listed and successfully closed dozens of short sales. And each bank does it different. I've got a short sale right now, the one that I was talking about in Lindsay, that is with a bank that is also, it was also guaranteed by Fannie Mae because it was a rural housing loan and Fannie Mae guaranteed that. And so not only did I have to jump through the hoops for this bank, I had to jump through the hoops for Fannie Mae and go through their process. Basically, if you run across a situation where you're going to be listing a short sale, best thing you can do is get approval to talk to the bank on behalf of the sellers, whether that be whoever their bank is, Wells Fargo, Bank of America, whoever. You can Google it and find out the loss mitigation phone number, and then call up there and just flat out say, got a client that wants to start a short sale process. What do I need to send you guys to get permission to talk to you? And then let them either email it to you or tell you where to find it on their website or whatever. Get that filled out and signed by the seller, send that in. Again, it's going to take 3 or 4 days for them to process at least, and you actually get permission to talk to them. Once you get permission to talk to them, call up there as soon as you get permission. Sometimes they'll say, call us back in 3 days. We'll call back in 3 days or 4 days or whatever. And then just flat, when you're talking to the loss mitigation partner, flat out say, what's your process? What do I need to do? Because sometimes it is simple, easy, list it, send me the offer, I'll walk you through the process and everything like that. Sometimes it's a little more involved and say you got to create an account on equator.com and Fannie Mae shortsale.com, and you got to go through this. Sometimes it's VA and you got to go through their system and everything like that. So the best thing you can do if you're going to list a short sale is to get permission to talk to the bank and then call up there and ask them, what do we do? What do I need to do? And just let them explain it to me.
Thank you.
No problem. Anybody else have any questions? Okay. I know that I kind of went through this a little quickly because it's been 35 minutes or whatever. Normally I do have a full-fledged foreclosure in today's market with a slideshow and everything like that I go a little bit more in depth because I kind of walk through how do you make an offer on HUD, where do you go to make that offer and things like that. But this was a little bit different of class. The way I understand it, it was a mastermind and everything like that. And I didn't want to take everyone's time for 2 hours for a mastermind. So if you have any other questions, feel free to give me a call, shoot me an email or whatever, and I'll ask any questions based on the situation. And again, it's one of those that's the answer is going to be very situational, depend on this, and may depend on 3 other things. So we'll kind of have to see what it is. Okay, I see someone typing in the chat. Give me a second here.
Hey, Brian, I actually have a question too.
Okay.
I'm curious about the sheriff sales that get published in, Lord help us, the newspaper.
Okay.
So they list a few different things, and I'm just not sure what the real price of a sheriff sale would be. Is it actually in the paper, or is it an auction process, or what is it?
Most of the time, they won't put it in the newspaper, but most of the time you can go to the website for the sheriff's sale website for that county. I don't know about some of the more rural counties if they actually have a website, but I know that Cleveland County has a website, and Oklahoma County and Canadian County. Basically, you can Google sheriff's sale for this county, and it'll take you to a site, and it'll actually flat out tell you bids to start at this price. And that is based on, they did an appraisal or a BPO or whatever, and they're going to set the minimum bid at I believe it's 75% of the appraised value. So if it's listed at $75,000, if they're saying that's the minimum bid, then they think it's worth $100,000 as it is. Now, again, just because you have a client or you go in and you make a bid for $75,000, that doesn't guarantee you're going to get it. That doesn't guarantee that even if you're the only one making a bid, that they're going to approve it. It's all up to the bank. The bank has a minimum dollar amount that they will accept. And if it doesn't reach that minimum, then they're just going to take it back, quote unquote, take it back. And then they're going to finish up the foreclosure process, and then it's going to be listed with a realtor once they get it, go through that process. And every bank does it different. I've seen them go through sheriff's sale, and then a week later, it was actually listed with a realtor. I've also seen them go through the sheriff's sale, and 2 years later, it finally got listed. So kind of up to the bank and their process, and there's no telling when a house is going to actually hit the market.
Okay, but the process is kind of sheriff sale, then foreclosure listing with agent.
Yes.
What happens if it doesn't sell with the agent as a foreclosure?
It will always eventually sell with an agent. Because once it's got to that point, typically being on the listing side of a couple of foreclosures, typically what the bank will do is they will have it listed at what they think is a good value based on appraisals and whatever. Then if it doesn't sell within like 20 days or 30 days, whatever their guideline is, then they'll lower the price. And then they'll wait another 20 days or so, and then they'll lower the price again. So they have a process. They'll eventually lower it down enough where somebody will buy it. And if that doesn't happen, sometimes they'll fire the listing realtor and relist it with a different realtor at the same price. So eventually it will get sold on the market with one listing realtor or another. Okay, Tara, any tips on that has a client that's received a notice on their home that their home is in foreclosure? Again, it depends on when's the last time they made their payments. If they're like the typical buyer that's in this situation, they stuck their head in the sand for 8 months, 9 months, hoping it would go away or hoping their situation would change and they could catch it up again and everything like that, then they don't have much time. But again, the general process takes about a year. Sometimes you can slow that process down. If you can talk to the bank or have them talk to the bank, or call the bank while you're sitting next to them and verbally give them permission to talk to them for them, you can say, we're going to start a short sale process. We need time. And they will give you a reasonable amount of time most of the time. Sometimes banks are, they're just dumb. If they've been ignored for 10 months, 9 months, a year, whatever, they'll just move forward with foreclosure, and then the bank will, eventually do the foreclosure and send the sheriffs out to evict them eventually. while these are bank owned and there's less emotion involved, you got to keep in mind that there is someone on the other end that eventually is going to get, there's a person on the other side that eventually is going to get tired of seeing the same house on their list of stuff to do for 10 months or a year or whatever. And eventually they get tired of it and they'll just move forward. So if your client has been kind of ignoring them, or if they're jumping on it, if they're jumping on the process, then you got time to sell. You just got to start the short sale process, or at least start the process, because sometimes you get into it and you find out, oh, well, their payoff is $20,000. This is a $250,000 house as it sits. Well, then just put it on the market and as normal and sell it, and then pay it off. Again, their payoff's going to be higher because they keep tacking on fees and everything like that. But if there's still plenty of equity, then you'll be able to sell it, and they'll get the difference. It's treated like a normal one. You should disclose to the title company that hey, they're a little behind, so there may be some fees and everything like that. And you should disclose to the buyer's realtor that this process may take a little bit longer than normal for us to get the payoff and everything like that. For privacy reasons, you can't just tell a buyer or a buyer's realtor, hey, these people haven't made their mortgage payment in 6 months, so we're hoping that we can get this through. You can't tell them that, obviously, because that's disclosing too much private financial information. And that's not you working for the benefit of the seller or fulfilling your fiduciary obligation there. But you can kind of disclose to them that, this may take, we're going to get it through as quick as possible, but don't be surprised if there's a little hiccup with the closing, the title work and everything like that. Siobhan said, how do you know which ones qualify for the 203K loans? My favorite. 203Ks are, for those of you that don't know, that's an FHA loan that is designed for rehabbing houses. In general, they have a maximum that they will allow, which is typically $30,000 in repairs. And they don't approve any repairs with foundation issues. They just opt out. Even though we all know that you can get piers put in for anywhere from $350 per pier up to $1,500 a pier, and we may be only talking about $1,200 or $3,000 worth of pier work. They're not going to let you add that into the loan. So you kind of have to use your judgments and look at the house and the actual condition and know what's going on and everything like that, and know the rough general guidelines for FHA and what the appraisers require for repairs. Stained carpet, they don't care about stained carpet. Old wallpaper in the dining room or the bathroom, they don't care about that. That's cosmetic. You can't really add cosmetic repairs to a 203K. It's for safe, sound, and secure in general. So it kind of gives you a rough guideline and a rough idea. The trick to that, Siobhan, is to find a loan officer that actually knows what they're doing with a 203K loan. Because there's 100 of them out there that'll say, sure, I can do a 203K loan. And they don't know what the heck they're doing. And it's going to be a long, drawn out process. And you're wasting everyone's time and it's never going to get done. If you have any more specific questions about the 203K and if this house would qualify for it, hit me up and we'll kind of go over some more in-depth and more thorough things. But it may be one of those things that we have to see it in person to actually see what's going Okay, Tara, I've been working with 2 lien holders to get the seller to fill out the packet. It's been over a year.
Hey, it's the same person we were talking about earlier. So I can just call you and we can talk a little more specifics because it's kind of a mess.
Okay, with kind of what you said on that, absolutely, give me a call. We'll talk about the specifics. But I want everyone to hear this. The biggest hurdle with short sales, with listing short sales, is keeping your seller motivated. I've got one that we've had an offer on, and it's a legitimate offer on for 4 months. And the seller he's moved to Tulsa, and his phone gets cut off half the time. He doesn't have email and stuff like that. And I've been chasing him and hounding him to get like I said, the financial statements. Bank statements, pay stubs, whatever the bank asks for. And by the time I get that stuff, the bank will say, okay, well, we need new bank statements because these are 6 months old. So you got to tell your seller, you got to kind of make a judgment call and have a very frank conversation with the seller as far as, are you going to be motivated? Are you going to jump through these hoops? Are you going to do this? Because if you're not going to do this, then my best advice is stay as long as you can and save up your money. Because if you're not going to help me out, if you're not going to jump through these hoops, then it's going to waste everyone's time. It's going to get foreclosed on anyway. And then all you did was stress me out, stress the buyer's realtor out, and stress buyers out. So you just got to figure out if they're actually going to jump through the hoops and actually do it and follow through. Okay.
Brian, what is a good number to reach you?
My cell phone is 405-816
Okay.
9074.
Thank you.
Problem. Feel free to give me a call or shoot me a text message. I would say in general, text message is the best way to get a hold of me because I work with buyers and sellers, and I do BPOs, and I do property management. So with all that in mind, I may be in the middle of an appointment with someone or whatever, and I can't answer the phone. Doesn't mean I'm ignoring you, but I will get to you as quick as I can. Feel free to shoot me a text message, and that may be the best way to get a hold of me. Does anybody else have any questions? Okay. Appreciate you guys listening and being here. If you have any questions, again, you have my number. Feel free to shoot me a text message, give me a call. If you run into a situation where you'd rather just turn it over to me and let me list it, I will pay you a referral fee, 20% referral fee for short sales and or buyers that are convinced that they want to buy a foreclosure house. But what I tell everyone when I do these short sale foreclosure houses, if you send me someone that is wanting to buy foreclosures because they're an investor and I end up selling them something, they end up liking something else that's not a foreclosure, I'm not sending them back to you. I will gladly pay you a referral fee, but if they buy something else, then I will pay you a referral fee. So just FYI on that. Okay. Well, I think we're done. Again, I appreciate you guys listening and let me kind of go over the whole process.
Okay. Thank you guys all for joining. Brian, thank you so much for doing this class. I know we've seen some chatter that I think they all loved it. So we'll have this posted afterwards for you guys. And Brian, I'll send you a link to it so you can share it out with anybody who's interested.
Okay.
So thank you guys very much. Again, thank you, Brian. Great class.
Thanks.